Good morning, everybody. Welcome to the Flow Show. And as you can see from the screen there, we've got something big coming. The future of Forex analytics is changing. We've got some exciting news that's coming in the future. We're not going to give any of the game away right now. So if you want to find out what's going on, then I will pop a link up for you to this page here. Our coming soon page. Let's stick that in the Zoom chat for you now. That explains all. That's all I'm going to say on the matter at the moment. What I would say, though, is that if you sign up for our newsletter to be the first to get that news of what's coming as we release the details, we are going to be giving some prizes, bonuses for people who sign up to that list. That you will become an early adopter when we launch. You will get in early before a public launch. For this month, the rest of June, we are offering a $25,000 TFP assessment account, which will be picked from the list at random from people who sign up. If you are already a Forex Analytics subscriber to the platform, don't worry, you will automatically be in that draw. And you'll also be hearing what we're doing. If you're not, then stick your name and your email in there, sign up for the newsletter to qualify for that bonus. And as I say, get exclusive pre-public launch access, other benefits and bonuses. So get done. Bran, you're already a subscriber, mate. But if you're not, even if you are a subscriber but not on our newsletter list, you can still jump on there as well. So big news. Keep an eye on our social medias over the coming months, because we'll drop you some little tidbits about what's going on as we get there. Anyway, morning, Kay. Exciting times, it seems, for us lot.
Yeah, very, very, very. I don't know no, I think we know what's more important. It's the changes that are upcoming in for us, or the improvements, and rather than all that central bank stuff and wars here and there. No, the big news is that we are evolving.
Yeah, absolutely. And yeah, we've got some good stuff for you. I can tell you. Oh, I'd like to tell you, but I can't. If I had to tell you, I'd have to kill you after. Anyway, right, let's crack on with the show. And where should we start? We'll start in Japan with a bit of data out overnight. Some trade balance data there, not too much change around that. We've had some core machinery orders coming out on the month, down 9.1%, not as bad as expected, but still a significant reversal over last month. This stuff obviously all being affected by trade stuff, likely, since it's April data. Year on year, though, better than expected, 6.6%. As you can see from those trade numbers, a little bit of a drop in activity for May on both sides. So imports down 7.7%, exports down 1.7%, not as much as expected for those exports, but a bit lower activity overall. The BOJ, apparently, they're getting into the AI game. They're going to introduce AI to streamline their analysis of price and interest rate data, according to the Nikkei. Okay, Japan likes a robot, even from the old days. They're getting involved in AI.
Even the Bank of Japan.
Yeah.
What? Next thing, the MOF is going to use AI as well. I mean, it would be so much cheaper for them to just subscribe to Forex Analytics and come and look at our analysis, and we would be doing all the work for them. Now, I mean, I'm talking about the MOF because I'm recalling my old banking days, and when I was in Japan and I had like those frequent visits to the Bank of Japan and the MOF, and really, I mean, those buildings that we were meeting them in, they could do with a little bit of freshen up, but I don't think AI would be good enough to do the job there.
No, absolutely. Anyway, let's see how they get on with AI. Anyway, Over at the ECB, Victor Villeroy says we are in a good position on interest rate policy. Now, he had been pushing for further cuts, so maybe following the last meeting, he's been talked down a bit, and now towing the party line that they are in a good place. He did say, though, that the ECB should analyse the euro rate in policy decisions, but he fully supports Lagarde's idea of a global role for the euro. So still, euro is in topic of discussion amongst ECB members. UK, Bank of England tomorrow. We had the CPI data out, and people can make what they want of this one. CPI came in lower, but not as much as expected at 3.4%. The core came in as expected at 3.5%. So we are seeing inflation coming down. Although some of the other metrics overall still looking a bit sticky. RPI came down to 4.3%, core RPI 4.1%. We're on the trajectory lower, but we're still at some quite lofty levels, certainly nowhere near the 2% the bank would like it at. We did, though, see a slight cut of expectations. Instead of seeing a full 2 cuts coming by year end, we're now down to 41 basis points, so 9 shy of the 50 basis point 2 cut level. So inflation, as I say, going in the right way, but still a little bit sticky. And some of those monthly numbers are obviously positive as well. Does it change anything for the Bank of England? It might keep them from, we know they might get a bit more dovish over the jobs report last week. This inflation data going the right way, but probably not enough to tip them into another cut. But it's a bit more even, I think, now going in. Kay, you got any thoughts with BOE on the back of this data?
Is it not going to be again? Last time it wasn't, but not going to be like a tight one. Just thinking about, it's still sticky inflation, but then we have seen those numbers weaken a bit. What am I going to say? Dovish, very dovish hold, or even a neutral cut could be possible, but it's going to be. It's not the base case for a cut, but I think there's this. We cannot dismiss the risk somewhere. Okay, we've seen that pretty strange man behavior as well, who is uber hawkish and then all of a sudden goes for a 50 BP cut, then goes firmly on hold and saying that everything is nothing is done yet. I don't know. Will she not be siding with the cutters again? Maybe not for a 50, but it's to me it's a bit of a dive on its side,
Yeah, absolutely. I think that what we're going to have to watch for tomorrow is the votes, whether they're going to be close to a cut or whether they're going to, still imply that it's going to take a bit more to push some of the others towards a cut. So anything like a 5-4, 6-3 is going to be close to a cut over the next meeting or two. If it's a 8-1 for staying on hold, then we're probably a bit further away than the market will expect. So that's what we'll look forward to tomorrow. We'll wait for tomorrow. It could be a bit spicy, Kate, because the US is going to be on holiday, so we might have a little less liquidity to play with.
And then you've got the Bank of England coming at the same time as well. That there may be some decisions made surrounding Iran, and so already the volatility may be higher. So I think it's going to be a danger one, the Bank of England tomorrow. Regardless what they do, it's I'm not sure I will want to be involved ahead of it. I mean, unless we got clarity or relative clarity in Iran, then Bank of England will probably be a bit better tradable. But if it's a mess over there, who's going to do what in the sterling? Well, I mean, let's say if the situation worsens over there and the Bank of England is dovish, then probably cable will get a severe knock on the head. But we are not there. Actually, we don't know. That's the short.
Yeah, I think that's right. Like with most data and events this day, you've got to see what the market's doing going in. It's no good picking a side now because anything can happen between now and then. Right. Riksbank, they cut their policy rate by 25 pips as expected. They're now at 2%. They say the forecast for policy rate entails some probability of another cut this year. When that is, though, we don't know. It says the economic recovery that began last year has lost momentum and inflation is expected to be somewhat lower than in the prior forecast. They also said we may see a stronger krona if investors reduce US assets. Going back to some data from yesterday in old Yankland, we had retail sales out, which you needed to know your numbers for this one because we got a very soft looking headline number down 0.9%, but that was countered with a stronger than expected control group number. The reason this control group is important, it contains some of the more core measures, but it's also the one that goes into the GDP pot. So that's why that control number is always important. So we saw a little bit of a negative reaction at first on that headline number, and then it swung around again on that control number. So again, gives you shows you some importance of why you need to know which numbers are important and which numbers are not. Same as the NFP and all the numbers that come out there. The New York Fed, which is basically the empire number for services, that came out minus 13.2 versus a prior minus 16.2, so negative, but better. Not usually on a lot of calendars, but I picked that up out the pile anyway. Later on, we had industrial production, which came in a bit softer at minus 0.2%. Manufacturing, as expected, 0.1%. Capacity utilization dropping to 77.4 from 77.7. So a little bit of softness there as well. Business inventories coming in flat for April, which might be a little bit of a surprise with all the trade stuff going on, but maybe that shows all the front running is done and dusted. Retail inventories, excluding autos, they were up 0.3% as expected and previously. Bit of housing data as well from the NAHB. The housing market index gone backwards to 32, was expected to rise to 36. So that wasn't good. We did have a 5-year tips auction, which seemed to go off pretty tickety-boo, so nothing to write home about there. The Bank of Canada, they issued their summary of the last meeting. Nothing we didn't really already know. They said it's harder to cut rates if the firmness in core inflation persists. That was after they saw quite a steep jump in inflation. But then they said there could be a need for further reduction in rates if the effects of tariffs and uncertainty continue to spread through the economy and cost pressures on inflation were contained. Von der Leyen, this is all the trade stuff, says trade talks between the EU and US are advancing. Both have agreed on the July 9th deadline. Says that the EU has a trade surplus with the US that could last. German Chancellor Merz has been out and about. He expects to deal with the US before the summer is over. He also said that if Iran doesn't back down, the complete destruction of Iranian nuclear program is on the agenda, which Israel cannot achieve on its own. He was speaking in German press, so maybe I'm inferring some context there that isn't there. But though that comment sounds like Germany might also be willing to join in anything. A lot of the focus, though, is on whether the US is going to pile in with Israel on this. That's been all the talk overnight, or since yesterday afternoon. US VP Vance says Trump may take additional measures against Iran's nuclear program. US officials have said they are moving fighter jets to the Middle East and extending deployments of warplanes to bolster defences during the conflict. Israeli Minister of Strategic Affairs says we are close to completing the mission in Iran. The army estimates that the war will end within 2 weeks at most. So we've got a bit of a deadline, or a projection, should we say, on when this thing might come to a close. Other headlines have said that Israel is targeting one more nuclear facility, and if they knock that out, then we could get an end to this situation. But meanwhile, they're still lobbing shit at each other. Okay, all this risk move we've got going on. We've got a bit of an insight, and this answers Ali's question. All this ramped up talk about the US getting involved. We saw risk taking a bit of a hit yesterday. Well, dollar risk in its terms of the dollar rallying a bit and whatnot. Not huge moves, but it just gives us a bit of insight what happens if they do step into the fray.
Yeah, absolutely. And of course, Trump's posts are not strange to the moves that we saw yesterday. So risk took a bit of a hit. The dollar now back onto the safe haven. It's a bit of a general accepted move that if US would get involved, the dollar would get some safe haven, which should see some safe haven buying, which we saw yesterday. Also, we saw it in other crosses. Although, if you look at the two FX currencies that usually are pretty much affected by risk, the yen and Swiss, they had like a temporary blip, but then we're already stabilizing and back at levels where we were before. It all came out. It's really the dollar that benefited from it this time because of the potential direct involvement of the United States, right? Now, whether it's going to come to fruition or whether it's going to happen, I still don't know. But yeah, that's the thing. And then also what I've said on in our room, then even on Monday, it looked like on Monday there was like this hedging against all bad things, and then on Friday, and then on Monday, come Monday, and then people went out of those positions. It actually went the other way around. And I said, and I said in our room, I said this is setting up for a pretty decent turnaround Tuesday, and it's exactly what we got in most currencies. There's really very little exceptions. Euro dollar came back down from above 116. Cable especially got hammered, and let's not forget that sterling is a bit of a risk currency. We are of course ahead of the Bank of England as well tomorrow, and the FOMC tonight, who are expected not to move. So maybe that also coming back into the considerations of people saying that, well, the Fed is not going to move. We did have that ECB cut. There is risk for the Bank of England. Perhaps there is certainly risk for the SMB. So the market bought a few dollars again, or at least reduced dollars shorts. And I guess that's now we're at a phase. I think we're the next. Well, tomorrow is Juneteenth as well, so I guess some people have been reducing positions not to be at risk of increased volatility. So now we are at this point where we are really at a wait and see point. I guess in a lot of pairs, and especially for the dollar. The dollar is looking a bit better. There's no two ways about it. The dollar is looking better, but then we have seen this in the past as well. And are we not in a similar kind of situation? Of course, barring a worsening of the Israel-Iran situation, but taking that aside for a while, we have seen this kind of behavior already before. That is, the FOMC is not expected to do anything, nor perhaps say anything. They're expected to be pretty neutral. But is the market not waiting for it to be behind and then pick up what it was doing already beforehand? And we have seen that already a fair number of times.
Yeah, absolutely. Yeah, sometimes the market just takes its foot off the gas, waits to confirm it's not getting anything before moving again. But this is going to be a bit of a wonky one, potentially wonky one, because we have got markets closed in the US tomorrow. We're still amid all this risk stuff. So there's going to be less liquidity, which means more potential blips around headlines. Will the market react and reposition straight after the Fed, or will it leave it until it comes back Friday? There's a lot of I don't know around this this day, the Fed, and tomorrow. So don't, as our mate DK says, who's on holiday, don't trust anything at the moment.
Yeah, and to be fair, I'm running on greatly reduced positions right now.
Yeah,
because of the risk side of things. Yeah, I do have a few positions. I do have my main bias positions are still there, but I mean they are nowhere near what I could have had like a few weeks back, you know.
Yeah, I'm exactly the same. The only one that I've got that's been running for anything for time is my dollar mix. Otherwise, I'm just nibbling in and out here and there. Still playing the Aussie a bit, seeing if we're going to get a break up. But yeah, apart from that, I'm not willing to take on any big risk at the moment. Just trade a few levels if they're seen. Right, let's just finish the news off. Just something to keep half an eye on the 25th of June. The Fed is going to be running an open meeting to discuss proposed revisions to their supplementary leverage ratio standards. Now, what does that mean? What that is all to do with regulations, Basel, MiFID, all that stuff. This is to do with basically how much money banks have to set aside to cover any particular risk events and whatnot. So that's being discussed. Whether that's going to lead to any changes or not, I don't know any foresight into this, whether there's been any messages, what they're looking to do. But if they hike leverage ratios or cut leverage ratios, it could mean we see some market moves if banks are forced to put more cash in the pot, in the safety, the rainy day pot. Could mean that they might have to close up some other assets or whatnot. But anyway, just half a thing to keep an eye on the 25th. Going back to AI, Amazon are giving us maybe an early look into our impending doom. They said in the next few years, we expect the rollout of generative AI and agents to reduce our total corporate workforce. They put out a blog post all singing, praising AI and what it's going to do for customers, whilst taking on the bottom that it probably means job losses for people there. So this is the product of AI, particularly when it's used in the commercial sense. Going to be hard to see how people are going to get jobs when AI can do the job of 10 people. Though they won't tell you that, they'll think that it's going to improve productivity. It's going to be a load of horseshit. That is the big thing that's going to come in years to come, how much AI displaces workers and what those workers are going to do after that. Anyway, that's for Amazon to sort out for the moment. Kay, anything else for anything else?
No, thanks. Just the thing is, and that's maybe what's keeping the yen on a bit on the defensive as well, is that Japan and the US don't seem an inch closer to a deal.
No, absolutely. Not even a budge, not even an inch given, it seems, at that G7 meeting. Apart from the fact they're going to continue talking. So yeah, that's ticking on. But it also means we could get a headline out of the blue at some point that they take something together. Where are we? We are the 18th. The deadline is the 9th of July. We probably won't start getting into that, or the market won't start picking up on that until we probably cross into July. We saw it every other tariff deadline that the market pretty much ignores it, trades everything else. Then a week before, suddenly realises, oh, there's a deadline coming up. We better start trading it. Obviously, we don't know what we're going to get in the meantime. But if there's still a lot of deals outstanding, getting close to that deadline, you can bet your bottom dollar Trump's going to start throwing his letters out and start threatening, and that will get the market all wobbly again. But
which is probably why they want the Iran situation, at least from the US side, Iran situation done and dusted by the time they need to worry about tariffs again.
Yeah, absolutely. But we saw that these tariff deadlines, they're not as volatile as they were before when we had these moves. We had these big volatile blips, and then they got less and less. Pairs like dollar CAD, they got less and less as well. So I'm not expecting, if we are getting to the 11th hour and then no deal's done, I'm not expecting any huge moves like these sort of spikes, because we've been here before. Market probably expect a can kick, but still expect some volatility the closer we get to that deadline. But a ways to go yet, but keep that on your calendars. Might as well look at dollar mix while I'm sitting here on this one. Finding a bit of a double bottom in play now down at this prior low in the 82s. So that's sending a bit of a marker there. We have had prior price action like that, similar to that. We're just deciding what we want to do at this 19 level as well. This is still very bearish, of course, and there's no reason to change that thinking for now, but we know where it has to take out on the downside to continue lower. Then it's going to have a crack at this 50 fib. That's of the 2024-2025 rally, low to high. 1910 is the nearest resistance area. Then we got this 1918 and bigger 24-25. So we're bearish below that, more so below that, more so below that. And if we can stay below that, we remain bearish, and then we might need to see what happens on a move down on this one. I don't know if I'm getting a little bit twitchy about this one, Kate. It's still bearish. I mean, there's no change in that, but we really haven't seen any sort of pullback, which the longer that goes on, the more I get a bit more nervous about whether we can see the ideal levels or whether something happens and we blow up,
Yeah, I mean, on the other hand, where the rest of the dollars is doing better, we are getting just blips. Yeah, we had that move up to 1910 and then yesterday 1903, but where the rest of the dollars remain relatively big, it's already coming down again. Even though I did read something about Pemex. I think Gav posted it in our room this morning about Pemex being a bit in trouble with suppliers as well. And yet dollar mix is not really going up. So contrary to the Canada, once again, the mix is still behaving better. Call it perhaps still high interest rates or so, but it does look like the Mexico is still a lot closer to US than anybody else, and that is what's still keeping the mix supported relative to any other currency, basically. But you know what, Ryan? I think we just have to look at the levels. Get above that 1910, then we may have a move back up to those 1930s again. And yeah, I mean, if being short, we get money for being short, right? But then we also do not have to spunk all of that away, remaining blindly short if we would start to go above 1910, 15 or something. I think then perhaps there is more to come, and then we may just move out. And if it fails again, then we can still go back short, But I mean, the overall move is still very much there. I mean, it's. I'm not going to say it's a no-brainer, but it's still very, very heavy, that dollar mix and Mexican peso as such, extremely bid versus everything.
Yeah, and I suppose it's if you're talking about all these flows out the US rate-wise, it's the perfect one to go to. You don't need to go and stick it in bonds. You don't need to go and get fancy with it. you can just shift it into MEX, leave it there, and as you say, and the carry on it. Doesn't take a lot of
Yeah.
doesn't take
What
a
I would
genius to
do
work that
though,
one out.
yeah, what I would do though, I mean, and perhaps we can quickly talk about the FOMC then, which is tonight. What I would do though is put a take profit in there if by any chance Powell would decide not enough is enough, but would decide, okay, it's maybe time to have a look at those that slowing, not dropping off a cliff, but slowing labor market. Um, Slowing-ish inflation as well. So perhaps if we would get a down move in the dollar on the back of it, perhaps it's also good to place profits in there because it can go a quick dip or drop below there towards that 18 and a half, and then perhaps see a bit of a bigger revival. That's what I'm going to do anyway.
Yeah, I think you're right. I think I might just drop a couple of bids in there, not just to close up, but maybe take a little bit of a separate long on a first test down there, maybe from 60, 65, because it's a big level I'm waiting on down here. It's a humongous level, sort of, a lot of action historically, and I think on a first test basis, it might be somewhere where we could see a decent reactive bounce from. But for now, trend is your friend, and it's downwards. But yeah, maybe stick a couple of cheeky ones in for the FOMC. Right,
I'm going to do the same. I'm going to do the same. I'm thinking about 1875 and then 1852 3 just ahead of the 1850 and see if I get any of those. And yeah, because we're still not safe from risk events, and sooner or later the market may turn around, as we have seen already a couple of times. That yeah, out of the blue, all of a sudden, the carry traders move out of a part of their position, and you find yourself back at 1930, 40, without too much of a reason, but just because they're getting out of, and there's nobody selling anymore. What I would still keep in mind is that Trump said that they won't do any separate tariffs or stuff like that with Canada and Mexico. We've been talking about it before, but they would be waiting for the USMCA revision. Perhaps for in case of the Mexican peso, that seems that the market is thinking that, okay, he's leaving Mexico alone, and that comforts the market a little bit in the fact of keeping their long MEX positions on.
Yeah, and we also heard that he's next going to be targeting pharma. So yeah, it still doesn't mean he can't lob a truth bomb around that won't get this one jumping higher. But Mr. Trump will post what he wants to post, and we'll deal with the consequences as always. Yeah, I was looking at dollar yen quickly because we are still knocking around this 145 area. We can't seem to really hold a break for long above it. This 145.50 level being the next one we need to get across, but we are just starting to hold the lower end down around 144.90. While things are quiet, yes, the levels work, but obviously big risk headlines. I don't care for coloured lines. So, and with the Fed coming up, even though it's looking technically like it wants to hold here, headlines could send it much lower as well on the Fed or whatever. Looking at this just now, though, Kay, I think this might be another contender if Mr. Powell sends the dollar a bit lower, given the mood it's been in just for the last few days at least.
Yeah. You know what? I mean,
Oh, you've gone.
I think am I back? Yeah.
Yeah, yeah.
I think there may be better currencies to be short dollars against if the Powell decides to go dovish. But I mean, it's certainly, if there would be anything worse happening in Iran, and if the Fed would go a little bit dovish, yeah, then of course this is back at like probably 143 in a flash or so. But the problem to me to really be long yen is that trade deal. And I'm really astonished that the US has not yet made a deal yet with Japan. I mean, I just can't get my head around it. I think it's the most stupid thing that is going on right now on the trade side. Yeah, so that to me is a bit counterbalancing all my positive yen feelings that I may have.
Yeah, I think you're right. I think you're right about that one. Right, a couple more, then I'll bounce it over to Mr. K. Just Aussie, not a lot going on in the Aussie. We're pretty much bang in the middle of where we've been trading recently. We've still got this wider range, this big important level, 64, 40, 45. We're finding still bids just coming in ahead of that down to the 50s, 60s. This level is a real nut job at the moment, a real hard case to break. So I'm still in the waiting camp, but we're sitting here pretty much on the figure at the moment. Doesn't look like it wants to go anywhere. Again, though, Kate, this is not moving much on risk either. 20 pips here, 20 pips there.
Yeah,
Why is it remaining so well bid? Even we see gold coming off and it stays there.
yeah. That's because the market has not given up. I'm talking about the money managers, the bigger, the guys who are looking at the bigger picture. I don't think they have given up yet on their lower dollar bias. And yeah, we have those pretty rapid, because we have to say we were up at 65, 45, 50, and we did see a knockback down to 64, 70-ish. It is a percent move, right? So that is not negligible, but it's to really see a reversal coming up in the dollar. You need the medium to longer term folks to start changing their opinion, and I don't think we're there yet. I think the global bias for the longer term people is still somewhere that the dollar may suffer over the course of several months. Our audience and sometimes ourselves as well, and people in our room, we are looking at intraday moves, but we never can forget that behind there, and those who really make the moves, the big moves, right?
Yeah.
They are like bigger ships to turn around, and they are like tankers to turn around. And if they one day, and which will of course come, but one day if they change their minds, then you will see a lot different moves if you get like risk events like this. But that's where I'm thinking that they haven't really changed their mind yet. I mean, yes, the euro dollar came, and every dollar is sort of done a percent move if you look at it, um, because the crosses are not really. Yeah, okay, they're hopping up and down, but the crosses are really not moving that much percentage-wise. Percentage-wise, so it's still pretty much a dollar market, right? Well, take away that Riksbank thing because they are still relatively dovish. They have been revising growth, etc., down as well. But yeah, I think it's the longer term people. If they would be more bullish dollars, a risk event like this would have had a much bigger impact, I think. Yeah.
Yeah, no, I agree with that 100%. 100%. Last one I wanted to show you, and this is just a lesson in how, sometimes tech levels can be amazing. I was speaking about 136.50 on the way down. It did all that. It broke. It held. It came back lower. It came up. It held for 5 minutes last night, broke, and now it's holding again at 136.50. Sometimes that's all you need to trade. I haven't done anything on this one because with everything going on, I'm not overly keen on piling into this one. But potentially, if it holds here, that might be a significant move for a kick up to some higher levels, 137, and this old area up here, 137, 30s, 40s. Still all short term. We're still in a very big downtrend, and I've just moved me fib lower, so that's brought that down even lower, and now the 38.2 comes just above all this traffic area here in the 140s. So that's going to be a big old zone unless I have to keep drawing this one lower. But yeah, just to highlight, when you've got these big levels, how the price can sometimes react against them. either side. And so you take your cues for trading that one. Right, Mr. K, I'm going to pounce it over to you.
Cheers, mate. I'm going to show today we need to talk a bit about the Swiss franc, right? Because we have that combination FOMC and SMB tomorrow morning upcoming, and that is potentially a big mover, together with the fact that Swiss franc is also a risk currency, as we all know. Although again, I must say that the moves that we've seen in the Swiss franc are not really reflective of a market who goes completely gangbusters short risk, in which case this should be trading lower. And this is the dollar Swiss, and we are coming into an interesting little level here, okay? It's not only the 61, no, sorry. I'm missing a line here, and sorry if it makes things a little more complicated, but we're coming into an interesting zone here. That trend line here has been pretty well respected, not even going to test, but we're coming in the zone here, 81.95, 82.05, 82.15. That's going to be an interesting zone, also because it has been traded in the past a good number of times, and the S&P is supposed to be cutting down to 0%, while only a minority is thinking that they will do a 50 BP and going into negative territory. But Schlegel has told us that it would be a measure of last resort, right, to go to into negative territory again. But they're clearly not too happy with the overall Swiss franc strength right now. So the combination of both, get a neutral FOMC, get a dovish S&P, and let's not forget they are going to cut to 0%. Okay, that's well below the Japanese rates even, and like over 4% below where the Fed is. Even if the Fed would do a surprise cut, okay, then the dollar will get a smack. But the S&P is at 0, and I don't see any reason for being long Swiss. So I think this zone here could come under could be tested on the combination FOMC S&P. Okay, so and if 82.15 would go, then I think an 83 print is going to look us as right into the eyes. But again, as you know, my main barometer for Swiss strength or weakness is still its biggest trading partner, and that's the euro. Okay, we're very undecided here inside this this wedge or triangle or whatever you may call it. But it has to be noted that again on risk off, we see this blip lower. Swiss is getting bought, but then we gradually go above. I do think that there is unless again unless there is a big risk event upcoming in the Middle East, which is negative risk, obviously. But the Swiss S&P is cutting to 0. We know that the ECB has cut as well, but we also know that the ECB bots now are okay with people putting money into the euro, and the S&P is not so okay with the Swiss franc being strong. So take away the risk factor of things. I think that there is a fair chance that we're going to test and move a bit higher. And why not go back into somewhere that 94, 90, 95 zone? I know it's not a huge move, but from where we are, it would be somewhere a 1% move. And there is some logic in this move. Obviously, if we get a surprise decision by the S&P, not dovish, but I don't know why they wouldn't be dovish. Then there is a risk we are going back below this level and for a retest of the low 93s in euro Swiss. But I'm starting to think this is building up for perhaps a move higher. I don't have a lot, but as I said, I'm running on greatly reduced positions, but I still think that this is a possibility. Sterling yen, it's been rejected, that little level, right? No, that's Kiwi yen, by all of them. have been rather rejected. Why am I always going onto the wrong page? It's been rejected. Yeah, there is that level here. It's got to do with the sterling, right? We've seen euro sterling as well moving higher again. We've been speaking about it with Ryan on the show. I don't recall whether it was yesterday or the day before or every day, but there was this risk that euro sterling was going to push back up to 85.5. That happened. It's a sterling thing. Sterling is a risk currency, and we are just ahead of the Bank of England again tomorrow with the usual risk. And I guess that's why somewhere we have been rejecting that zone now. Look at it's not before a while because we're still in the 195s, but this is a pretty volatile thing. Look at 194, the figure. What's going to happen there? If 93.90, 194.15, the range. That's where I think the fun could start. Whether it holds and we're starting to go back above, or if it breaks, we could do easily another 1% to the downside. That's how I look at that sterling yen mate for now. Quick look on the Kiwi, which has, relatively speaking, well, not relatively speaking, which has exactly the same look as the Aussie dollar, because the Aussie Kiwi is pegged between 107.5 and 108. But again here, 60.80, it is holding. Okay, we had just a quick move through on the Monday, but the 60.80 is now a very tough nut to crack. We are in this kind of channel. 60 the figure, 59.90, that's where it has to hold to continue higher. Now, will it hold? It will depend on the dollar and on risk, of course. It's relatively neutral right now where we have been trading, same as Ryan was commenting on the Aussie. We are in around that 60 20 40 zone, and I think it's pretty neutral. Allow for a test of this one before making a decision. Okay, that's mainly what I want to say. It is one of the candidates, and I guess together with the Aussie as well, it is one of the candidates that if we get a combination of not too bad a risk environment and potentially Powell starting to say that they are, or they have noticed at least, some minor changes in the labor market, or inflation not yet picking up, so they are perhaps a little more dovish. This, with the Aussie, is one of the candidates to go for a walk higher. That is just my personal opinion. Okay, break below 59.90. I think, well, the party over is a big word, but we are going to correct lower than in that case. And with that, Ryan, back over to you, mate.
Thank you very much. Yeah, yeah,
yeah. I'll let you take the S&P, mate. Mark
yeah.
is up.
No worries. Well, who wanted to know about S&P?
Mark.
Mark. Okay, let me grab the screen quickly. Let me go on the page first, if I can find it. There we go. Oh, no, I can't. There we go. And grab the screen. Bing, bang, bong. Right. You see that okay? Oh, no, not yet. There we go. See that okay, mate?
Yep.
Cool. All right. This is looking a lot like the Aussie at the moment. We're not giving back much, even on the risk-off rallies, but we still can't get hold for any real length of time above the 6K level. And this is really sort of the gateway. I've got a line in at 60.12 just because it comes across some prior levels, but call it 6K if you want. No one's going to argue over 5-10 pips here and there. But until we see a real solid hold above this 6K level, there's no point talking about all-time highs, new highs, or whatever, or going up to test those highs. This is a bit like what we saw with Aussie dollar at the 64, 40, 45 level. Big level, we kept hitting it. Then we started little moves above it, but couldn't hold. And only when we really got a hold above it did we then kick on to the 6500s. So this is a bit similar around the 6K level mark. For me, we get an end to this Iran stuff, that might be the kicker to get us moving higher. In the meantime, I don't think the market is going to go too far out on a limb. So it's looking pretty balanced at the moment for me. I'm still a little bit long. No, I'm not. I'm talking at my arse. I got out yesterday when we got this little risk off move. I would consider being a bit long if we got a proper hold at this 6K level, maybe for a run up. If it's headline driven, I don't mind jumping in on a positive headline and try and ride it higher if it goes for that one. So that's my view on S&P, mate. I hope that's all right for you. Right, finally, just I'll put this link up again just for anyone who's missed it, who's not just come into the room late. If you're late, where's your note? We need your teacher's note as to why you're late. No one should be late, Gavin. I'm pointing at you, mate. You seem to be coming in and out of late. It's always noted. Something big is coming from us at Forex Analytics. There you are. Good. Tick you off the register, mate. So if you haven't signed up for our newsletter, do so now. Be part of the early crowd into what we've got coming up, being with a chance for this month to win a 25k trader funding program assessment account. Pop your name, pop your email address in there, and you'll be the first to know what's coming. And on that note, we should call it a day. Thank you very much for coming to the Flow Show. Cheers, Kate, as always. And we shall see you tomorrow. Hopefully a quiet day after the FOMC. Take it easy.